Tuesday? Is that all it is? Yep. Happy Tuesday, September 24th. Welcome to the final hour. This is Chris Pulver here. Today, I would say global melt up. A lot of it instigated by China, kind of probing the markets a little bit. Not a bad thing. Let's take a look and see where everything's at. I'm tracking a trade. I've already closed out of this one. This is a trade on E-mini futures. I did an ES broken wing butterfly. It was an 85-cent credit that's right now trading for an additional 30 to 35 cents, which would be roughly $1.15 or so, $1.20 per contract. Not too bad. There's still a profit trap in here over the next 90, well, I guess over the next 2 hours before 5 p.m. futures close, but over the next hour, especially with closing bell, if price were to fall back in towards my 57.75, this should be able to rally up towards $1 to $1.50 to $2 credit, in addition to the 85 cents that I took on the trade initially. So tracking that trade today, still a winner. It was about $47.50 per contract, not too bad. Big P&L day, up over 30 grand on the day. Pretty happy with that. A lot of that is, let me look at my P&L for the day. So if I go to overall P&L, a lot of it is coming out of China. So if I go to the P&L on the day, Baidu's up $6,200 today. K-Web's up $3,300 today. URA's uranium up $2,900 today. Silver up $2,700 today. Barclay's still up. That's a longer term play, but it's got a nice little pop today for the P&L. We jumped on Altria up to 51.33, up 13.47. JD is another China play, 33.73. I actually bought it today during a live session at 32.50. That's up a quick couple of bucks on. I took a $1,500 tranche position, and I'm still looking at doing some trades out to next summer, I believe. I think I did a leap on those. Let me check. Going out to, I'm doing a leap on the 27, 25, and 23 on JD, which is JD.com for an econ play. Oil up $1,000 today. Alibaba up $900. Nvidia up $841 today. Still looking to see if Nvidia can hit 130. That's a volatility play I have out to October 4th. The SPY is also, hanging in there. We didn't really break the highs. We tested, but we didn't break the Qs. Tested, didn't break. Let me check and see where everything else is at. So symbols looking pretty good for the day. P&L's up in the day. Pretty happy. No complaints, really. But watching, of course. So a couple of trades on the SPY. Wednesday's FOMC from last week to Thursday's push. We're still kind of trading in between. Now, this could act as a big volatility zone. The markets today just kind of digested the consumer confidence, which came in a little bit softer. But overall, let's just see where we're at. We've got about 57 minutes for the close. Looks like, the market's not doing too much today. But if we look at HSI, big day for HSI. This is the Hang Seng Index up over 4% today. If you go to FXI, up over 9% today. That's a huge push to the upside on FXI. Let me see something really quickly. I think I pushed FXI out. I did this already. I think yesterday I did some rolls, or I did it last week. Let me take a look at FXI for a moment. I might end up looking for another roll. If I can roll it up and out, I might try to do that and see if I can grab another 50 cents to $1 per contract. So right now, I own shares. I've got them called at $29 for a covered call. My break even's around $23. Let me see if I can roll this out for another month. If I roll out, let's see. If I keep the same strike, go out, I don't get anything for it. If I go out in time, January 17th. What? Interesting. That's weird. So if I roll the 29 to the 29, it's basically free. That doesn't do me any good. If I roll out to January 17th to the 28.85, I'm getting the break-even credit. That doesn't do me any good. If I go out to February, they're going to make me pay for this. To roll out an extra 80 days, I'm going to pay to keep the strike price the same. Obviously, that doesn't do me any good. The nice thing is I don't have massive size on FXI, but what I can do is, rather than complaining about, oh no, what do I do now? I'll just look at placing fresh trades. So I can let that ownership get called away at 29, but now I can look to see if we are officially ready And that's a big if. I don't know if this is, officially like China's time to shine. It'd be pretty fantastic if it was, because we look at a lot of these trend lines. Trend line here has broken. Trend line here has broken. Carving out some lows back in the late 2022 stages to early 2024. If we get this big push to the upside today, if there's more to come, there's ways to participate. So I think what I'm going to try to do is put on a ratio spread and look at taking some shares. So I do have some ownership almost across the board. Let me double check everybody here. So 1, 2, 3, 4, 5. I have some partial shares for everyone else, but I've got shares of FXI, and I'm looking to maybe take on more. That's a margin account. That's a margin account. That is a margin account. These are IRA accounts. This is a margin account. Okay, so the lower ownership, 1, 2, 3, 4, 5, 6, 7. Yep. So lower ownership is the IRA accounts. I just did a cash position, and then the others are margin accounts. And let me see what else I can do here. So, we've erupted to the upside. I've got a nice little pullback towards 28 or so. I'm willing to take on some more shares and do some repair. So what I'll probably do is, let me take a look at this. If I go to trade, and let's get some expirations out here. So if I went, let's say 60 to 80, I'm going to go the 52 to 87 day expiration on FXI. And this would be November 15th. If I were to, I don't love that. So I own the shares, bought some shares at 21. Let me see what else I have here. So FXI, shares and covered. Shares covered and a $29 call. That's a naked put. All right, so this one, the naked put should be mostly in profit. Let me see if this one registers here. This is a January 17th. I can look and see what credit I received on that, but I have the shares. Anyway, I'm going to see if I can establish another position. And then this account here, shares that are covered. This one, shares that are covered. Shares that are covered. Just shares and just shares. Okay, so we are starting to get some uptick, which is great. Now I want to look at, I think I'm going to go out to the 87 day. I'll go December 20th. And right here, if I look at 20, if I buy the 20, where's this gap at? So this gap would be around $28. I wouldn't mind taking some ownership if I did a 29 by 28. And then on the ratio spread for the 28, I do 2 contracts. I get 40 cents credit plus $1 off. If I want to take some ownership, this is a good way to get some ownership. So let's see, $28 assignment minus 39 cents minus $1. I could take ownership at 26.61, which would be a decent, reasonable pullback, and we may or may not get it. I could also just put, in the money credit spreads and see if those work out. I don't want to necessarily lose on this. I'm trying to stay slightly below price. I think I'm going to do this ratio spread. So at 29 by 28, maybe I do a 28 by 27. That'd be 22 cents credit, and I'd own it a little bit cheaper. Let me do the math there. So if I own it at 27 minus 22 minus $1, I'd own the shares at 25.78. That's if I get assigned. I want a little bit more credit. This is about an 81% chance that the strikes finish out of the money. This is on the lower end of the trade. Yeah, that's what I'm looking at here. Francois is asking, what kind of trade do you recommend if FXI that didn't involve ownership? Probably credit spreads. I mean, realistically, if I just did a credit spread and I said, hey, I don't want to take any ownership, okay, and I'll just clear this up. Let me see if I just want to do straight up. Right now we're trading at, $30.31. If I did a 30 by 29, I can get 47 cents, and all I need for price to do by now until December is stay above $30. That's a pretty easy trade if you ask me. So what I could do is bump this up to, let's say, if I did 10 contracts here, I'm risking $500 to make $470. If I want to go one strike in the money, then I get $550 for risking a $450. Buying power is pretty low. It's only about $400 of buying power. That's a pretty easy trade. By December, we're essentially saying, look, price, if it just goes higher and we get greater than $31, then I keep all that profit. And I think that's okay. In fact, I might have just talked myself into that trade. If I go slightly in the money, I get about 55 to 57 cents. I like this trade out to December. The only way this is going to get uglier would be if I did this. If I take the trade with a 31 by 30, that's a bull put spread or a credit spread. If price were to fall, then I would basically on the 10 contracts, I would take a loss on 9 of them. Okay. And then I would keep one and I would keep the assignment and I would work my way through it to, longer term, try to play this thing up towards, realistically, I think that even if we measured this move here, I'm looking for FXI to get up towards like $32 to $35. So this is the area that I'm watching pretty closely right in here. So that range, if we have room to run, there's $33. If we get a break to the upside, if this runs to the upside and we break this high, if this is a double bottom, we're doubling this move and we're going up towards like $45 to $47. So even a credit spread right there is pretty good. So I think what I'll do is I'll start with a credit spread and I'm going to do, let's see if I can get 50 cents. I'll take this trade here. So I need price to stay above $30 and I'm going to get 48 cents for this. If I go, I'll do 5 contracts. So I'm risking 260 to make 240. And if we have any pullbacks, I'll probably reestablish this trade. Expiration wise, let me make sure I don't have any overlapping expirations for FXI. I see a lot of Decembers. So I've got December expirations on the covered calls. If I do the December 30 by 29, this is on the put side, so it doesn't impact the covered call that I have. I don't mind this trade. If I go $1 higher, I'm looking to see if there's any continuation here. I can get 55 cents. I don't mind this trade. I'm going to go ahead and do this trade right here. I'm getting 285 credit for a 215 in risk. Get 57 cents. I'll take this trade. So I'm doing a 31 by 30. I'm going to put this in my Discord. So obviously, if you're tuning in live to the session, you get a free one out of me if you're interested, which is totally fine. When I'm trading live, I'm trading live. So there you go. This would be a stock options position. This is FXI. 12/20 expiration, sell the $30 put, buy the 29 put. Actually, it's a 31 by 30 and 30. 55 cents credit or better. Looking for FXI price to stay greater than 31 by expiration for full profit. Can also manage to a 50% to 75% take profit target. If you want to take profit, let's say price goes up higher and all of a sudden your 55 cents is down to 25 cents or 20 cents. You can take that profit, redeploy it, because it is more capital efficient just to take the profit up front if it happens quicker and just redeploy versus trying to wait all the way to expiration. So that's not a bad play. All right, so I'm going to get in here. I've got 58 cents. See if I can get filled. So I'm going 5 contracts right in here. 58 is not filling. Let's go 57. Filled at 57. Okay, everybody's going to get some action on this one. 57 there. And more accounts. 57 there. Very nice. All right, so that is in. So here, let me add this in. So a 12/20 expiration, 31 by 30. Sell put 30. Buy put, I got filled for 57 cents credit. And I'll take a screenshot here, post that in my Discord chat for the alert. There it is. Okay, that trade is in. I'm just going to add that to my spreadsheet. So FXI 12/20 expiration. I might even do a November one as well and get that thing staggered out. So this is a 31 by 30 bull put spread, 57 cents credit, all accounts, and 5 contracts. Okay, let's go to November. So I've got the December 20th. Let me go to November. If I go November 15th, or I go December 31st, I might go a little bit further out. Let me go December 31st, do the same thing. So now I've got 50-cent spread options, which is actually kind of nice. I might go a little bit heavier on this one. If I go 30/50 by 30, I get 30 cents. That's essentially like getting 58 cents. It's essentially the same trade. I'm going to go after 10 contracts in this one. There's 5. Let me go 10. So I'm getting 290 to risk 210. It get 29 cents credit. That's out to the 31st of December. So here, 29 cents not filling. Hopefully I can get 28 cents. Oh, come on, you dirty dog. 27 cents. Filled at 27. Filled at 27. Okay. There we go. Just a couple more accounts here. Okay, so that added in. And then FXI, this is a 12/31 expiration. Yes. 30.5 by $30 bull put spread. 27 cents credit. Okay. So I like the trade. And I'll add one more thing to this message here. I'm also adding a 12/31 expiration, 30/50 sell put by $30, buy put for 27 cents credit. Same idea, staggering expirations. If FXI is greater than 31, so 30, 50, and $31 by expiration, keep full credit. Okay, so just looking to juice a little bit of profits there on FXI. I do like that trade. Okay, how do you think the news will affect Visa stock? What news? Visa is down off the highs. Is Visa down because of the cautiousness on the consumer? Antitrust lawsuit. Oh, there you go. Case could weigh on shares for a while. I'm not even sure what. I didn't hear about that. Department of Justice sues Visa over alleged antitrust violations. I mean, come on, man. It's like you got Visa, MasterCard. You got those are like the only cards in the game. I mean, you got Amex, you got Discover. I don't know. I mean, we're sitting here, by the way, near all-time highs. I mean, a little antitrust situation. All I see on Visa is if it's offering up a chance to, see past resistance become support. Let's say it gets down here, I'd probably look to buy it there. So I don't want to buy the shares necessarily. Just do some options if we can, pin a low. I'm just going to set a chart alarm. So that low is around 252. I'm going to set a chart alarm on Visa at 255. I mean, if the stock goes to zero every time that the Department of Justice decided to put a trust probe in it or a probe, it's like, how many times does that happen? Hardly ever. Not to mention, I mean, one of basically 2 to 3 companies in the entire space. So I'm sure it's just going to be dragged around, and it'll be like Visa getting dragged through the mud a little bit. But if it offers up a discount, I'm probably going to trade some options around it. So let's say we drop, 13%. Let's take a look fundamentally at Visa, because I would feel like it checks a lot of boxes. Insider selling the past 3 months, which isn't surprising at the all-time highs. Earnings forecasted to grow. Earnings are growing. We're looking at price to earnings, price to sales. We got PE ratio 29.2, price to sales 15.7. It's fair value, which I don't want to buy it now. I would love to see it come down to the 240s, 250s and see what we have. But interesting, like MasterCard, Fiserv, Visa, PayPal Holdings. It's up there at 36.7 with the peer. Visa sitting at 29.2, so slightly undervalued when it comes to price to earnings, but fair value with discounted cash flow. PayPal is one I didn't take a look at in a second. We're still going a little bit higher in PayPal. I'm out of this trade for a nice little bull call spread. And there's maybe some more in that space, but I'm happy with the little pop I got on PayPal. The rest is just ratio spreads. So that one's out. This was a max profit of around $22.50. I got it with $21, so I took most of the profit well before the expiration. That's pretty good. Let's see here. So Sabrina, I did on, if you're looking at FXI, so I did a 31 sell put and a 30 buy put. So I created a $1 spread, got 57 cents on that one for December 20th. And then I also did a 12/31 expiration 30.50 sell put and a $30 buy put, and I got 27 cents credit. So the premium is actually a little bit better on the December 20th one, because that's getting 57 cents on the dollar, and the 30/50 by 30 is giving me 54 cents on the dollar. So it's slightly different, but I'm still going to stagger them out, see if I can generate the income on both of those weeks, and see what FXI wants to do. But like I said, measurement wise, I'm looking to see if this will continue to push up with some momentum towards 33.50. If we break above that, then I'm just looking to double this move. That's a double bottom, and we're looking to come back up here, medium to long term at 46. So that's a great pattern to see in the market if we get it. All right. What else we have going on today? So Russell's up, Dow is flat but still green. Qs are up. SPY is up barely, negligible. I mean, it doesn't look like a lot's going on, but globally, we definitely have some movers and shakers. We have about 35 minutes, 37 minutes before the close. If I go to FinViz heat map, let's see what we have in the non-S&P. Let's go world. This is why the market's doing pretty well. This is why my portfolio is up a ton today. It's mainly because of some China exposure, but it's also with my diversification in gold and silver and copper. Here's Taiwan up a ton. TSM's up 4% today. Look at China. Okay, PDD Holdings, Baba, JD, Baidu, Lee. That's a EV play. NIO, that's an EV play. That's up 11% today. LI is up 11.22% today. EDU, is that? Oh my gosh, I I remember talking about EDU at like nothing. Oh my gosh, are you freaking kidding me? I wonder if Linda's in the session today. One of my longtime traders, Linda, we talked about EDU in the 20s, and I mean it's up 200%. So you bought it in the 20s. It had a run of 340% or so. Has obviously pulled back, but whatever, it's off the radar. I mean, I was like, why on earth would this stock drop the way that it did? A lot of it was, it's tech. There's a crackdown in tech. It suffered from that. Plus, COVID wasn't the same. That's been the big question mark with China is, are they recovering out of COVID? Are they willing to, add money supply? Are they willing to add liquidity to the markets? Are they willing to prop up tech and prop up real estate? And the answer has been no, like resoundingly no. But as of today, it certainly looks and feels a little bit different. So China is bright, bright, bright green, and we'll see if that has anything to do with some type of trend. I know one day doesn't make a trend, but this has been something I've been watching and waiting for probably a year, close to a year. So hopefully patience pays off, and we'll see everything. But look at this. Look at all these symbols. When I hover over China, look at all the green there. I mean, that is, I don't know, maybe 30 to 40 tickers, all green in a big way. So impressive stuff. And then we go to the S&P. Not quite as good. Nvidia's up a lot today, but Visa down in the antitrust probe or the antitrust DOJ thing. Mastercard down probably because of that, because maybe they're next. Who knows? Capital One down. Capital One had a huge rip post COVID. That was a gangbuster trade. Financial services also, and then Synchrony. So yeah, financials in a bloodbath today. JP's okay. Wells Fargo, Citi, Bank of America. Let me check a couple of those actually. Bank of America. I don't know. I'm not doing anything with Bank of America. I'd like to see if it pulls back into this like $30 zone. I'm going to go with $31 chart alarm. About the only spot that I'm pseudo interested in. Other banks, not so much. Does GLD have room to run? Sabrina, it's a bull put spread, yes. So I'm selling the put higher and I'm buying the put lower. It's a bull put spread or a bullish credit spread. Would you consider trading V bearishly? No. Nope. I would just wait and see if it comes down and test the support level at a 15 to 20% discount, and I'll probably just throw some options at it if I like that price. Does GLD have room to run? Let's check gold and silver. So let's go gold, which is up to 2660, and again, cranking out all-time highs. So we are, man, what a rip. Gold is an impressive beast. I'd love a pullback, but man, I am not getting one. So, I mean, the reality is if it runs, it runs. I mean, I'm up, here's, $6,500 on gold futures. Here is some, here's $11,000 in GLD. I look at silver futures. I'm in for about $11,000 in silver futures and SLV up around $39,000. I mean, I'm still letting those run. I think silver still has a better measured move than gold does. I don't know where to call the top in gold. I don't want to call the top in gold. I don't really care what it does outside of if it pulls back, I'm going to add more exposure. If it doesn't pull back, I'm just going to ride this thing to the best of my ability and try to manage profit. So why not buy calls? Why would I buy calls at all-time highs? I'm not that interested. Okay. If I'm going to buy calls, I want to buy calls after it pulls back and accumulates and then looks like we've got another run coming. Okay. Or buying calls, usually what do you have to do? You have to buy the call, cover the premium, cover the direction, and your calls finish out of the money and it's worthless. So, I mean, I have GLD calls. I crushed gold earlier this year with diagonal spreads that only took about 4 months instead of 12 months to give me profit. This was like a 10K winner in GLD. This is another like 15K winner in GLD. And then all I've been doing in here is like sitting in futures with credit spreads and just trying to generate income, trying to be patient just in case it went sideways. So for me to buy and say this, I mean, I don't think there's any reason to get out of gold. But until this starts to look like a, Bitcoin chart before Bitcoin crashed, or like a cocoa futures chart or a lumber futures chart or copper for that matter, when copper was ripping to the upside before it crashed, that's when I'm going to start protecting profit on gold. So I still am just patiently waiting, and maybe I'm silly for waiting, but I don't want to buy the highs. So if we have any pullback, I would be anxious to get some exposure there and just add to my trades on GC and GLD. But I'm not just going to buy calls at the high. I like gold, but I don't like it that much, especially when I like silver better. Silver to me is a much better trade technically. I can measure it. I can see it. There's a swing, and this first black line is symmetry. So all I'm doing is I'm taking this measured move right here, and I'm projecting that symmetry to my profit target, which is why I am heavier on silver, looking to get up towards $35 to $36, and that would be a wave 3 move. So if this is same thing, we just had a 9% move on FXI, why would I buy calls? All that's going to do is jack up the premium, and I'm going to overpay for direction that I might not get. If the market reacts and then it pauses, long calls don't help. If the market reacts and then pulls back a little bit, I'd rather be waiting to see where I get my price where I want it. So I just don't buy highs. It's kind of my thing. I don't sell lows. I don't buy highs. Try not to. All right, so this swing right here, looking for symmetry. If that's a wave 1, wave 2, wave 3, we haven't gotten there yet. So this could all be part of a wave 3 structure. And I hope that there's a wave 5 going. So wave 1, all this is wave 2. Eventually we make our way up to wave 3. Wave 4 should be fairly quiet. And then wave 5, that's my long-term profit target back up towards $45 to $48 on silver. Lots of profit potential there. The 40K that I'm up right now could be closer to about 80K if that level is hit. So for me, that's worth the wait. And then I can also look to trade SI or trade silver futures to generate additional income and maybe boost that up by another 5 or 10 grand. Okay. Sabrina, it sounds like you want to buy calls. So I'm long silver. I have ownership of SLV. I did diagonal spreads. I have credit spreads. I'm trading futures. I'm long. So there's a lot of ways that I'm trading it. The good thing is time is working in my favor for all the trades right now, and I'm just going to sit and let them run. All right. Bitcoin, 63,8. Still a little choppy around that 69 to 70K, or I'm sorry, 64 to 65K level. Is this officially breaking structure? Maybe. This is a big maybe on Bitcoin, meaning I would like to see Bitcoin, if it pulls back in here and looks like it's accumulating, I think this could be a good spot to maybe add a little bit of exposure, and then we're actually potentially seeing what is a bullish pattern in the works. Now, this low that hasn't been breached yet, this low that hasn't been breached yet, I'm watching this carefully because this high is being tested. And do we go up to resistance and then fall back down? Do we come back down to support to offer us another buy trade around 50K? The structure is pretty clear. Like it's an accumulation phase, and I think this is good. I mean, if you have some patience, I think this accumulation, it looks pretty good for Bitcoin. Okay, what I'm looking for is, I do have some added exposure to IBIT, some added exposure to BITO. These are the two ETFs that I'm trading in addition to my, my crypto wallets and stuff like that. But if we get above 68,000, I want to make sure that we break and we stay here. But if we start going to all-time highs, that momentum is likely going to breed more and more order flows. And I think that once we break above 74, 75,000, this thing is probably going to be melting up into that 100K figure. So I'd like some pullbacks if we get them. I would love some pullbacks. In fact, if we get them, all I'm looking for is, 60 and 50 and 40 and 30. Those are easy dollar cost averaging levels. If I don't get any of them, then I guess I just sit on the positions that I have, which is still about 5% of my portfolio, and look at about 80 to 90% gains to hit 100K. I'm not done at 100K, but I think as an investor, I think that's pretty good considering my cost basis is under 30,000. So that could be a 200% gain, which isn't too bad. So I like it, but I'm watching Bitcoin, every day just to see, are we officially getting the melt up breakout confirmation signal to buy more, and again, at highs, at breakout confirmations, or are we going to stay here relatively sideways, building some more support, showing some more accumulation zones that we can maybe get a stab back in the low 50s again. If we get a stab in the low 50s, I don't mind it. I can take one out of the Michael Saylor playbook and just buy 100,000 Bitcoin. Or whatever the heck that guy's doing. I don't know what, between MicroStrategy on the balance sheet and Michael Saylor, I have no idea how much Bitcoin they own, but it's probably an obscene amount. And the valuation at a $63,000 spot price is probably obscene as well. I think it's something like maybe $6 or $7 billion, if not more, of just sitting in their treasury. So pretty wild stuff. Let's look at currency strength today. So currency strength today, we've got the dollar weakest. We've got the yen also weak that just got surpassed by the dollar. We'll take a look at the DXY in just a moment here. We got the pound and the Swiss just below the baseline. Euro is in the middle. We have New Zealand ripping to the upside. CAD and Aussie up as well. Commodity-based currency pairs, check, check, check. So risk appetite, commodity-based currency pairs, Aussie and New Zealand. I've said this for a while, and if you're trading currencies, you know this. If China is looking bullish, typically the New Zealand and the Aussie do pretty well. So you could be looking for some Aussie strength and New Zealand strength if China sustains the recent push and we get some added liquidity and some risk appetite coming to the markets. So that could be good. My Swiss pairs are doing pretty well. I'm still up some bucks there, sitting on some carry and some swap, so I'm fine with that. Let's see what else we have here. So that's currencies. Let's go. Hang Seng is up, 3.5%. That's a major, major move there. Look at this in the last, couple of weeks. Look at this, just in days. I mean, from the low on September 11th, go to a weekly candle here. Look at that. In 2 weeks, this looks like a pretty determined HSI, which is the Hang Seng Index for China. Again, I measure this the same way. We have really nice support here, and we have resistance here. If all we're doing is getting a break, and it's a break, retest, and a go, this is looking pretty good to get back to this resistance. So target one would be 22,000 or slightly higher. If we break above that, this could be a fantastic double bottom that gets all the way back up towards 30,000. I'll measure that exactly, but it would be pretty impressive to see China come back in a big way. If that is our low to high, and then I copy and paste that. I mean, that measure move on a double bottom is over 30,000. So we go from 19 to 30,000 on an index. That's a pretty impressive comeback. That is 56% upside. Now, how fast does that happen? Nobody knows, right? We could also see, this rip, and then it pulls back and it establishes more of an accumulation zone, and then we still stay the course, but it just takes longer. Or this just starts going and ripping. And the best thing right now for all these China pushes today would be push, pause. That'd be the best thing, especially for stocks. If you get bull flags, those are awesome in stocks because that means the momentum is there and the absence of sellers allows this stock just to pause and then rip higher. So if the bulls want to get this to run, you're looking for order flows, you're looking for all sorts of great stuff to show that this thing has upside potential. So a bull flag across the board on the index on those individual stocks would be pretty fantastic. So if there's anything more to give us in this China rip that we saw today, I'd be looking for bull flags kind of across the board. Right, EWZ, this is Brazil. This is sideways for right now. That's a weekly chart. Yeah, I've got a low exposure in EWZ. Apple sideways, Amazon up to 193. I've got it covered at 210 and also have a put just for protection out to November. Google, I had a 160 by 150 credit spread. No assignment yet. Let me see when that expiration is. I think I did it through earnings. Let me check. Google is right in here. So I've got the 165 by 160 out to December. Okay, so that was potentially assignment, but it's out to December. If we have Google back above 165, there's no issue, and I grab a profit. It would be a probably $500 profit on Google, but I need to see it get above 165. I'm willing to take some shares of Google and repair the cost and flip it for a couple of bucks if I need to. Meta sitting here at highs. I put in a trade this week on Meta. I did a 450 by 445 bear put spread, and then I financed that with a $400 sell put, grabbed the $1.80. If I take shares of Meta, it's going to be around 30+% down. So number one, I don't know if I'm going to get assigned. If I do, I'm willing to take it, try to repair it. But I put that trade on this week. Microsoft, I haven't done anything with Microsoft. I might be able to do the same thing on Microsoft if the IV is high enough. Let me find out here. Microsoft. I know they're looking to ink a deal with NVIDIA. They're inking something with BlackRock. They're in the space. I mean, this AI stuff, Microsoft is a big investor. Right now, the IV's at 38, so I'm probably not going to get the good stuff that I want. But if I went out to, let's go to the end of this year, 87 days is out to December. 115 is the turn of the year. Let me go out to January 17th and see what this looks like. So, I'm on the wrong stock. I'm going to go Microsoft. Microsoft is trading at a 22.9 IV. Let's go to January. So, is it good enough to trade? Where would I want to own it? Probably somewhere back in here around 350. If I could own it that low, that'd be fantastic. So if I wanted to, let me see what this credit spread is. Let me see if these will load up. So at January 17th, 350. So if I put in a 350 put, get some income there, Question is, could I do a 400 by 395? Not a bad play. I could do the following. I could generate $1.33 of income out to January, which obviously isn't a big deal. But if I was going to take some ownership of Microsoft, this is an 8 delta. I could probably go down a little bit lower here and have this one, even less threatened. But let me go down to that's, I don't know, 345 maybe, and then move this down. $1.16, $1.25, $1.36, $1.45. I guess I can just put in the put and say, look, I'll own it at 210. Why get the extra bonus? The reason I would consider doing a bear put spread is if price were to drop. To get below 380 to 375, we'd have to have a big drop. 380 to 375 is basically Microsoft is going to be going like a topping pattern, and we'd be pushing lower and then coming back into this window here. Now that may happen before the market goes higher. But I guess if I just want to say, hey, at 340, I'm willing to own Microsoft, I do own it at a discount. That's not bad. So if we had 340, that would be a 21% discount, which is actually also below previous resistance. That's not too bad. Now, if I did it naked style, 345, it does tie up a lot of buying power for my cash account, so that's likely not going to be the play. But if I did it in a margin account, it's tying up about $1,100. So would I take shares at $345 that tie up about $17,000, which I've got plenty of buying power here. I've got over 800K in buying power, so it's not the question of buying power. The question is, do I like the trade enough to take it? 345, 340, 335. Maybe I swap this out. If I did a 345 and a 335, ties up $2,000 in buying power. Probability of profit's 96%. I do have some exposure. So if I have a 12 delta and a negative 57 vega, those are a little high. That's me expressing I want to be bullish on the stock versus being delta neutral. So let me see something here. If I did a 345 by 335, I get 376. If I do the 400 by 395, this one's not bad. I eliminate some of that delta, not a lot. Now I eliminate a lot more, get $1.66. Let me move this down here, like a 390. 390 by 380. Check these levels. So the real important thing that I'm looking at here is if I want to take assignment of Microsoft, where would it be? 345 and 335, I would be looking to own Microsoft way cheaper. So 345 and 335, that'd be a net of around 340. Again, around a 20% discount. So 21% discount on Microsoft. Do I love this stock that much? I don't know. I'm going to think about this one. I had some Mag 7s in there. It checks a lot of boxes, insider selling, but still below estimated value, earnings forecasted to grow. It's a solid play if you ask me. It might be a little bit rich on the price to sales, price to earnings. Discounted cash flow, still looking at a $570 stock. We're trading at $430 right now. I think there's more room to go higher in a positive environment. Oracle has a higher price to earnings. Apple a little bit lower. Meta lower. Alpha. If I'm picking any trades, it's like trading Google and Meta actually offer a bit more value when it comes to sustained upside. But Microsoft did offer a buyback, offered a solid dividend, which I don't mind that play overall. So let me see. Question is, how much do I like this trade? For a margin account, I like it enough. So if I did a 345, 330, or if I did a 330 by 340, get rid of this, grab 334. This is by January. This is a little income play, only ties up $1,900. I can move these out of the way. I can roll these out further in time so I avoid assignment. Obviously, if the price is falling aggressively, there might be an assignment, but we'd have to drop a lot. We'd have to drop 20% on Microsoft by the end of the year. And I'm not saying that we can't, but looking somewhat unlikely. If this market finds a way to get new highs, I wouldn't be surprised if Microsoft finds a way to also edge higher. And that means there's little risk of assignment, and that just becomes an income play. So I think I'm going to take it. This is 334. I'll try to get 330 for this one. So let me get 335. 326 is bid. I'll see what I can finesse with the bid price here. So 335, not filling. 334, not filling. I might have to go down to 330. Filled at 330. Okay. Let's go this account here. 330. This account here. 151. There we go. Okay, so that trade is in. So Microsoft, I'm doing a 117 expiration, a 340 sell put for a $1.84 credit, and a 330 put for a $1.42 credit. I'm willing to own. Break even would be 335 in the shares, but if I take 335 minus my collected price, let's do the net math right there. So 340 minus 1.84 is 338.16. And if I did the 330 minus 142 is 328.58. So add that with the 338.16 divided by 2 gives me a break even of 333.37. Okay, so if I do take assignment, break even would be 333.37 for 200 shares, and pretty easy to add, covered calls, wheel strategy. I mean, going out 30 days or so, even right now at the money, if I went out 30 days, I could get, $8 to $10 for a call to, number one, lower my cost basis dramatically. Number two, repair the stock for maybe, $3, $4, $5 a share pretty easily and make it versus taking a loss. So that trade is in. All right. So a little MSFT. That one might take some buying power. If you don't like that one, I get it. That's a January 17 expiration. 340 sell put for, I think I said $1.84, and a 330 sell put for $1.42. Total 3.30 credit. And that break even would be 333.37. And add covered calls to 1, lower cost basis, and 2, repair for profit. All right, so that trade is in. Let me find a screenshot of that one. 340 is right down here. So 340 and 330. Let me drag this over. Okay, so 340 to 330. And what would that be from the all-time highs? If we go all-time highs, that is around 340 is around a 27% discount. So we can say 27 to 30% off or a lower price. I don't think a lot of people, I wish people think about, owning shares on sale. Like, yeah, I'm getting a 27 to 30% discount. Does anybody ever shop at REI? Like the outfitter, the outdoor store? They have these huge blowout sales and it's like, say 15%. And stocks, I'm like, give me 30% off, give me 50% off. I will gladly take a discount there. I mean, the Nikkei was on sale for 27%. with that crash we saw back in August. I'm not saying it was easy to buy in the wake of all that crap, and August 5th was potentially untradeable because the bid ask was so wide. But the opportunity was there to, have some pretty crazy discounts. Are you selling naked Microsoft puts at two different levels? Yes, I'm selling it's not naked. Remember, there's a difference between cash secured and naked. Naked means I don't want to own the stock. If you're doing a naked put and you have no intention to own the stock, then I would do a naked put and I would put in like a 100 to 200% stop loss on that premium you collect. So if I collected $1.84, so just on my 340, that was $1.84 credit. Okay, to be on the safe side, I would put in a what's two times that? So $1.84 times 3, that'd be a 200% loss. It'd be a 552. So if this was my credit, I'd put a 552 debit, and that would be a pending limit stop, because I don't want price to blow through that, but that'd be my limit stop to see if if you don't want to own the shares, then you're going to take a small loss right there. So basically, if you win, you can win up to $184 a contract. If you lose, you're going to lose about $360 a contract if you lose. So I mean, for most traders, that's manageable. I mean, you lose it'd be one contract if you did this one. If you lose $360, you live to trade another day, right? But I have enough buying power that I'm going to take assignment, and I'm going to use the premiums and the awesome premiums to get $5-10 out of a covered call, and I can turn a 335 or 333 break even into a 325 ownership price or 320 ownership price. All I need is for price to go up and get $5 to $10 of my strike price, and I can cash in for maybe a couple $1,000. So that would be my play there. But a naked put is you don't want to own it. Cash secured put means I'm willing to take ownership and assignment if it does get assigned. But that is what I'm doing, yes. Today, what's this one going for? Still trading at 30 to 40 cents. I'm glad I got out of the trade. It's nice. It's a 110, 1.15, 1.12 credit, which is a little bit of a bonus today, but it's well beyond my broken wing butterfly. So I just thought if it was right back into that pin price, it'd be pretty sweet. But futures market's just going a little bit higher. So, but that trade is full profit today. What's up with gold? What's up with gold? Gold's moving higher. Isn't that what gold's doing all year? So gold for the last 1, 2, 3 weeks has made another solid breakout. Now I will say, let me go ahead and just use a higher time frame here. The one thing about gold that I'd be looking for, and this is a hard way to start it, but we did have a swing from these like multi-year decade lows. This is like 20-year lows, right? At basically $240. If I take that ridiculous swing and call that wave one, which I know that might be making some Elliott wave traders like, squint a little bit or flinch. But if that is a wave one, this is a wave two, and we're still in a wave three. Wave three at this like 18127 zone could be pulling back at any point. So crossing 855. Are you guys in Walgreens, man? I have 2 accounts that are in Walgreens for dividends, and it is upside down like $7 a share, and it's just dog shit right now. But I still have a put on there. I still got it protected, but man, what a piece of crap stock for right now. And I just went to a Walgreens. I just did a FedEx drop off. It's like, come on, man. If they'd clean up their act in San Francisco and stop letting people steal $1,000 a day, then maybe Walgreens would fix their crap. But anyway, whatever. They also got delisted from the S&P this year and replaced by, I think, Amazon when that was a switcheroo. I think that was the case, or maybe it's the other way around. No, that's not true. I think Walgreens got delisted from the S&P this year. Whatever. I digress. But I mean, I'm looking at potentially a 618 extension all the way up towards 2950. I mean, you want to call it a round number. Maybe we don't get a pullback on gold until 3,000. And as much as I want to say, yeah, let's trade it. Look, I'm just going to keep the exposure that I have. Okay. I was very bullish in this wave. I was very bullish in this wave. Now it is just drifting and drifting and drifting and participating in whatever this wants to do. $3,000 roughly would be a heck of a profit target to start trapping some profit. Gold is looking more like this thing wants to break and pause and break and pause and break and pause. And if it starts to look very ballistic, then I'll start looking to protect some profit. But I can't get my head around buying highs just in case we have some type of snapback, recovery, retracement. I mean, it's overbought on virtually every time frame. Every momentum oscillator from all the higher time frames, all the RSIs and relative strength is all overbought. So it's kind of breaking those levels right now, but it doesn't want to stop. And I'm not trying to call the top. I'm not trying to sell gold at all. I'm just trying to let profits continue to run. But if we get any dips or pullbacks, I want to buy it. I'm just trying to wait for something tasty like a pullback. All right. You good on that one? WBA, let me take a look at this one. I should look at it with both eyes closed, but let's find out. 854. And I've got a $5 long put for 19 cents. It is going to help me protect profit. I mean, if it comes down to this level, I went out to January of next year. If this goes down hard to 8 or 7 or 6, and there's some time premium left in this, let me check on those puts. This piece of crap. What sucks is this account is up $27,000 and sitting on like an $8,000 drawdown in Walgreens. It sucks, man. Yeah, so it's 13 grand upside down. This would be up $40,000 if I just didn't get into Walgreens. Every quarter it's getting $1,000, but still, I hate this stock right now. My $5 put. Oh, you know what? I should have bought 20 shares. What the hell? All right, I need to buy 10 more contracts to protect this one. Hang on a smidge. So WBA, my expiration. I went out to January. January here. If I can buy the 750 for 80 cents. It's another 10. That's $800. I don't want to do that. That's going to increase the cost base. I'm going to buy another 10 to cover me out for hopefully 16 cents here. I got in for 17 before. See if I can get in for 16 here. Not filled. Let's try 17. Filled at 17. All right. And then this other account, same thing. This one has, yep, I'm going to cover this one again. So trade January 31. You got to be kidding me, dude. I just took this trade. That's weird. Let me go out a little bit further, I guess. 30 cents to 5. Ugh. Bucket of yuck, man. Let's go. I need another 10. So it's going to cost me $200 to do that. It's fine. There it is. Now it's going down a little bit. That's fine. All right, let's go 19 cents. Another 10 to get me covered. Okay. Filled at 19. All right, so that's covered. That's fine. If the stock price drops, what I at least can do is lower my cost basis a little bit. There's a 550. I'm going to set another chart alarm at $6. So if I do lower my cost basis, that's fine. I've got a break even here around like $14, and there's a nice pocket and everything, but still doesn't mean the stock is going to turn around anytime soon. So I'm just trying to cut off the bleeding. I'm not over allocated or anything, but it's a frustrating. All the right intentions of a dividend play that turned into like one of the world's worst stocks. Could be worse, I guess, but MO on the other hand is doing just fine. And this one's covered at 50 and 52.50, another dividend play. BTI took some trading on this one. Looking to see if this one wants to, rip up here towards the mid 40s. Try to do another defensive dividend play. So anyway, 359. We got some gamma activity right at the close. Look at that crap on the SPY, making some all-time highs, right, or not all-time highs, but pushing above these highs right at the close. Right at the close. I wouldn't be surprised if you start to see the volume. Let me go to Look at that. Futures up, NASDAQ up, SPX on the day. If I go, let me see if I have a volume. Let's go SPY. Just that last little bit. Let me go to the last like 5 minutes. Look at that price. This is that sneaky stuff that happens at the end of the day. This is why I don't like to have my, zero DTE stuff. I don't like to have those risks, because that type of directional move at the end of the day will absolutely crush your profits. If it works in your favor, then you get full profit, which is awesome. But that type of outlier risk is just not worth it. So anyway, that's a lot of volume, and I've seen this a lot. There's got to be some type of collusion-y black box volume algo thing that's just like go nuts at the close and just push things around. But that's for the big hummingbird projects and Wall Street algos and high frequency traders, as opposed to just me, a humble little retail trader. But interesting stuff. Okay. Any other charts questions? I didn't do a lot of Forex pairs, but if we look at the currency strength chart, you can tell what's going on. So we've got risk appetite with New Zealand on top, plus CAD and Aussie. You got Euro at the baseline. You got Pound and Swiss slightly softer. Japanese yen and dollar, the softest. DXY is making some fresh breakouts. Am I taking the bait on the dollar? It doesn't really matter, because the way I look at this is, if the dollar is going to drop, you know how I'm going to make a lot of money on the dollar dropping? Just by holding positions in the stock market. If I'm long stocks and I'm long commodities and I'm long gold and I'm long silver and I'm long Bitcoin and I'm long a lot of stuff, the dollar can drop all at once and there's a lot of money to be made right there. So I don't feel like I need to chase the currency market to try to grab a couple extra pips out of the dollar crosses, when I can instead see my entire portfolio benefit from a weaker dollar. That to me, if we have a softer yen and a softer dollar, you can't ask for a better risk on environment than that. And so this week, if we follow suit with Thursday, the Swiss National Bank is expecting to cut rates by 25 basis points. If they do that, you're going to start to see the dovish Fed, a dovish Swiss National Bank, the BOJ, as long as they don't do anything silly like raising interest rates by 75 basis points in the near term, risk appetite prevails, and we're going to see hopefully a nice little melt up that's fairly easy to hold on to. So it still feels a little weird. But I look at these technicals, and this is why I traded volatility on the SPY, the Qs, and the NVIDIA trade. Because if price just melts up, if it just melts up going into non-farm next week, that's the path of least resistance right now. If we break those Thursday high from last week, don't be surprised if direction is pretty strong. There's no sellers in the market right now. And I see that, like, when I'm talking to traders every day for my daily profit player, for my, my live sessions with A1 Trading, all I saw today was bullish, right? Everything on my gamma squeeze index was bullish. So price came down a little bit. These all were still lined up, and price came right back to them. Bullish trade on the day. The bear side, non-existent. Now it's interesting. You see like a 41 to 36, but it was at the open, it was like 55 to 0, then 44%. If I go back here, let me see if I can show you this. So when we first started the trade today, let's go the first couple of minutes. Looks like a 51 to 38, and then we go with a couple of candles later, 38 to 41, 37 to 42, a lot of indecision there, which actually was working pretty nicely. Then it started to flip. This candle right there was a 35 to 44, and it prevailed a little bit more bearish to the downside. So there's where we pivoted hard, right around 10:40 a.m. Eastern time. So anyway, I don't see a lot of sell pressure in the markets right now. So I'm just letting the markets melt up. I'm enjoying the profits. I'm letting them roll. I'm letting a lot of the credit spreads I have that are well away from price, those are all profitable. And the higher price goes, so if I have a credit spread in and price goes higher, if I collected $1 on the credit spread, it may not be worth $1 right now, but if it's worth 50 cents or 75 cents or 80 cents, and I can take that profit away, taking that profit now and then reallocating that capital is way more efficient than watching this dollar trying to go for a full dollar. If I had to wait, 1 month, 2 months, 3 months to get an extra 20 cents when I've already gotten 80 cents, I might as well just take the 80 cents and redeploy it. So if this keeps going up, I'll just find ways to keep participating. Okay. Let's see here. What would you recommend us watching on your YouTube channel for education? There's a ton of stuff on my YouTube channel for education, I hope. Number one, there's a ton of live sessions, but if you want to dive in, so before I start doing a bunch of live sessions every day, if you go to my YouTube channel, which is Chris Pulver, just youtube.com/Chris Pulver, I have a bunch of playlists in here. So if you click on me, I have playlists, and probably the best education would be in this. Where's it at? Trading 101 video series. I think there's 60 plus videos in this one, and this Keep It Seriously Simple. There's 43 videos here. So if you see this, I have 71 videos here, 41 videos here, all sorts of different topics. If you scroll through those playlists and see something or want to see something, just let me know. Let me know in these live sessions, or leave a comment on one of these videos and ask me to do some other video. Or if you don't see it in there, just make a request and I will build out a video on that. So, I mean, I've been on this YouTube thing for the last couple of years, and it's grown organically, which I'm happy with. And I deal with some imposters and scammers, and it's annoying. But the channel's growing nicely, and my Discord's growing, the YouTube's growing, Twitter's growing. It's great. And so I will continue to build out this kind of evergreen freemium content. If it can help traders, that's all I'm doing. That's all YouTube is for me, is to help traders, and have a place to go where they want to find me or find good trading education or good analysis or whatever it is. So that's a good place to start. Keep It Seriously Simple, Trading 101. Between the two of those, there's about 111, 114 videos. So that's a lot. Each one anywhere between like 15 to 30 minutes. I try to keep them relatively compact so it's not a huge time suck. But yeah, I hope it helps. And like I said, if you scroll through those and see a subject that's not in there, or you want to see a subject, then just let me know in a live session or leave me a comment, and I will happily take a week and carve out the time to make another video. All right. Very good. Okay, well, if that is it, that was a fast flying 1 hour, and it's 4:07. Happy closing bell. Happy Tuesday. We'll be back tomorrow for more, and I think I'm going to go for the day. All right, but I appreciate everybody being here. Thanks for watching. If you're in this watching on YouTube, would you kindly hit the thumbs up button, por favor? Anytime you're in YouTube, just that little click of the finger on that thumbs up does help a lot. It helps my videos be seen. So when people are browsing, it pops up on that right side where you have all those suggested videos. My video pops up when we're live. My video pops up afterwards. And that kind of search engine optimization is really built on the algorithm of, if you're in here with me, you're engaging with live comments, you're engaging with the thumbs up, that does go a long way. So even if our crowd is only 200 to 300 people live, and then 500 to 1,000 people afterwards, it does matter. And so it just shows like good engagement, and that's about as hard as I try to hack the algorithm. I mean, I could sit here and I could try to trend hack, and I could say like China this and Ukraine this and Fed this and FOMC. I don't. I mean, I'm just going to talk about what I'm doing in the markets every day. If you like it, here I am. But I'm not sitting here trying to be like the latest and greatest dance trend or whatever's happening with the headline news or whatever's happening with the election. It's like, I don't want to even get into that space. I'm not that interested. So I'm interested in the live markets. This is what I love to do, and I'm immerse myself in it every single day. So hopefully that type of content, short form, long form, is helpful enough that you support the channel, because that's all it takes. Cool. All right, everybody. Thanks a lot. Happy Tuesday. I'll see you tomorrow. Daily profit play tomorrow morning, and a final hour here at 3.